Today in the grain market, soybeans were a little bit higher. That vegetable and palm oil were really surging up today and kind of brought the market back. It did have a lower start, but was able to gain a little bit of a lift. But really, the market's been consolidating right around here. It seems to be that $13 seems to be solid support for that November contract. The CVOL is down to 33%, with the August implied volatility at 30.75% and September at 30.5%. So that just kind of letting you know that we're still pretty high in the volatility aspect, but the market seems to be slowing down a little bit, especially the open interest has been down somewhat too. Now, for the week now, we were down at one point $1.06, but the futures ended about down 89 cents for the week. That's pretty sizable compared to what we've been doing for the last number of months. Now, today corn was lower. It's just showing weakness ahead of the USDA report that's coming on Monday. We've been down for 4 days. That decline has just kind of like gained a little bit of momentum today. We had a range of like 17 cents. I think we were down 17, ended up closing only down 8. I think that we got down to 507. So we still know that $5 is still intact as a nice support level on the D's contract. But below that, we would be going back to like April prices. So that's something to be thinking about. Now, the August implied volatility is the lowest it's been since May. That's something to just be watching out for. And we knew that once the market was going to have a drawdown, all these numbers were going to follow as well. The CVOL is down to 48.1%. That's, of course, down below that 50% that we had been above for quite a while for corn, and down 70 cents now for the week. Now, wheat was a little bit easier, not as much as corn. I think that that there has been, I think that the harvest pressure, and we've been down for the 5th day in a row. All these things are coming into play. I think the SEP futures hit a low of 609.5. And that we haven't seen that actually since April. Now, we know that 630 was a big support level, that the market has stayed below that now for the past like 4 or 5 days. We're looking now at $6 being the big support level at this point. Now, the 625 options has been like the big, I would say that has been the big trade right now, which is kind of like right near where we are at this point. So there hasn't been anything else added up above. The CVOL for wheat right now is 32.8%, and now the futures in wheat has been down 37 cents for the week. So for corn, wheat, and soybeans, that's considerable. So the USDA report is on Monday. That will give us a little bit better, the market direction after that.